Welcome back to Bonnie's Life. I am thrilled to have you here today for a deep dive into the state of the crypto market. The past week has been nothing short of extraordinary, marked by extreme volatility, geopolitical tensions, and a remarkable display of resilience from digital assets. We have seen Bitcoin surge from the mid 60,000s to test the critical $78,000 resistance zone, gaining over 20% in just 3 weeks. This is a market that is maturing, decoupling from traditional equities, and showing us exactly why institutional capital continues to flow in at record rates. Today, we are going to break down everything that happened from Monday to Friday, analyze the impact of key industry events, and give you the exact technical and fundamental triggers you need to navigate this weekend. Let us start with a quick summary of the past week. The overarching theme has been Bitcoin's near-perfect inverse correlation with the US dollar, reaching extremes we have not seen in almost 4 years. While traditional markets grappled with the uncertainty of the Middle East conflict and shifting Federal Reserve expectations, crypto absorbed the initial shock and charted its own recovery path. We saw a massive $2.54 billion Bitcoin purchase by Strategy, the largest since November 2024, pushing their total holdings to an estimated $61 billion. Spot Bitcoin ETFs recorded their best weekly performance in over a quarter, pulling in nearly $1 billion, with a single day seeing over $411 million in net inflows. This institutional appetite is creating a formidable price floor, even as the crypto fear and greed index fluctuated wildly from extreme fear to a more neutral stance. Monday set the stage with intense geopolitical pressure. As the ceasefire agreement in the Middle East approached expiration, Iran refused to attend negotiations, and US Vice President Vance cancelled his visit to Pakistan. This triggered a sharp rise in risk-off sentiment across global markets. Oil prices surged and US equities erased their intraday gains. However, in the final hours of the ceasefire countdown, an extension was announced, and Iran agreed to pause military actions. Bitcoin, which had been hovering around $75,800, immediately responded to this marginal easing of tensions, closing higher and demonstrating its strong headline-driven characteristics. Tuesday brought a synchronized rebound. With the immediate geopolitical threat delayed, Bitcoin pushed above $76,300 and Ethereum held steady near $2,327. The broader market sentiment stabilized, and Bitcoin dominance stayed firmly above 60%, indicating that capital was seeking the relative safety of the flagship asset rather than rotating into altcoins. We also saw significant industry developments, including the SEC advancing its new digital asset regulatory framework and 12 European banks announcing plans to issue MiCA-compliant euro stablecoins. The market was clearly shaking off the weekend's fear, setting up for a strong midweek push. Wednesday was the day the bulls took control. The crypto fear and greed index jumped from 32 to 46, signaling a shift from deep pessimism to cautious optimism. Bitcoin surged past the $79,000 mark briefly, hitting an 11-week high before settling back into the $77,000 range. This volatility resulted in a massive $264 million market shakeout, primarily liquidating over-leveraged short positions. The resilience shown here was incredible. Despite the choppiness, spot demand from both retail and institutional buyers easily absorbed the selling pressure, pushing the asset through several key technical resistance levels. Thursday continued the narrative of institutional dominance and technical battles. Bitcoin maintained its position around $77,600, while Ethereum traded near $2,312. We saw the options market heat up significantly, with open interest surging over 211% to $38.86 billion. This indicates that sophisticated traders are positioning themselves for major moves. Meanwhile, the industry calendar was packed, with the PolyMarket 5.2 upgrade going live and significant token unlocks for Hyper and LMTS, injecting new liquidity into the ecosystem. Friday today brings us to a critical juncture. The market is currently sitting at a total capitalization of $2.68 trillion. Bitcoin is trading at $77,824, and Ethereum is at $2,319. The 24-hour liquidations stand at $189 million, with longs slightly outpacing shorts. What is most fascinating today is the decoupling we are witnessing. While U.S. equity futures sold off due to renewed macro concerns, crypto has built an independent recovery path. The capital structure of this market is changing, showing a much stronger ability to absorb downside risk. Now let us look at the crypto industry calendar events and how they impacted the market against our expectations. The Hong Kong Web3 Festival earlier in the week set a positive tone for Asian market participation, which was reflected in the steady Asian trading session volumes. The PolyMarket V2 upgrade on Tuesday went smoothly, highlighting the growing importance of prediction markets, especially with Kalshi recently cracking down on insider election betting. The token unlocks for Hyper, LMTS, INIT, SOSO, and MON introduced expected volatility, but the market absorbed the new supply without significant downward pressure, indicating strong underlying demand. Looking ahead to tomorrow, the highly anticipated dinner hosted by Donald Trump for Trump token holders at Mar-a-Lago is expected to inject significant volatility into the political meme coin sector. As we head into the weekend, you need reliable triggers for your trading strategy. From a technical analysis perspective, the most critical level to watch is the short-term holder realized price at $80,700. This represents the average cost basis for investors who bought in the last 155 days. A sustained breakout above this level will trigger massive bullish momentum as sideline capital rushes in. Conversely, $77,500 is your key support. If we break below this, expect a retest of the $74,000 secondary support. The weekly MACD has crossed bullish, and with the RSI sitting at a neutral 54, there is plenty of room for upward movement without hitting overbought territory. Fundamentally, keep your eyes on the ETF inflow data and the geopolitical news cycle. The consistent institutional buying, even during periods of high tension, suggests a strong price floor. However, weekend liquidity is typically lower, which can lead to exaggerated price swings. If you are trading this weekend, my suggestion is to watch the $80,700 resistance closely. If we see a high volume break above it, momentum trading strategies will be highly effective. If we face rejection, as we did in January, look to accumulate near the $74,000 to $77,500 support zones. The market is coiled like a spring, and the next major move is imminent. Stay sharp, manage your risk, and I will see you in the next episode of Bonnie's Life.